Hey, primary Top Gun options traders, Matt Buckley, call sign Wiz here, the chief investment strategist and primary model portfolio here at Top Gun. What an awesome week. Hopefully, all of you had an awesome week. If you don't feel like it was an awesome week to be trading, you're doing it wrong. I'm telling you, because this options were built for this type of market environment. When the market's trending straight up or straight down, options aren't. Sometimes it's hard to, have an edge with options. But in this type of market, it's like shooting fish in a barrel, folks. We talked about this last week. We were near correction territory. With the Russell being down about 8%, some of the major indices approaching correction level, and since the financial tsunami hit, any time that we've, hit that correction level, we've bounced up, and we did again this time. Will we not the next time? Who knows? We're in a very tough trading environment. Why? Because the market is rallying on horrible news. Does that make sense? Isn't that perverse? So the market's rallying on bad news in the hopes that Helicopter Ben, the Fed chairman, will come up with another round of quantitative easing. He'll be forced to prop up this market again, and that's why the market ran up. The market also ran up this week on a China rate cut. Seriously, that's what our market's rallying on. The fundamentals are horrible right now, folks. And I've said this before. I'm not the tinfoil hat wearing black helicopters around my house type of guy, but there's nothing good on the horizon, folks. Obama warns on Greece. Welcome to the party, Mr. President. How about you warn us on California or Illinois or our own country? Why don't we start there first? So that's kind of my strategic mindset, ladies and gentlemen. We just got bad news on the horizon. The market also rallied this week on some potential good news because the ECB met and said, okay, let's try and do something. It's sold. Every one of these rallies I sold into, and we're going to keep doing that. So let's take a look at a potential new trade. First of all, let's take a look at how our current model portfolio is performing. Love it. Absolutely love what we're doing. Again, let's cover our performance in the worst month, May. In the market in 2 years, we made nearly $16,000 in model portfolio profits, or over 32, or it's about 32%, 31% on a haircut, using capital of $50,000. And actually a little bit less. I mean, look at that, folks. That's pretty cool. Letting a couple positions expire. We traded some Apple weeklies last week, and there's $500 in the old pocket. I want to take a look at GOOG. Go back to GOOG. I have a ton of GOOG on right now in various model portfolios, and it's doing great. But I want to take a look at a weekly trade, and since obviously next week is expiration, there are no weeklies. There's a split between implied and historical vol. Not ginormous, but enough to have some nice juicy premium in the options. And let's take a look at the chart of GOOG. Saw some highs, saw the upper or the 630s a couple weeks ago, and then obviously it's been doing the slide for life along with the rest of the market. A little bit of here's the relief rally and everything like that, gap down, and then I'm a seller of Google right here. Let me just get straight to the point. We can do a nice weekly trade. It looks like 590, 600 is kind of the ceiling between now and expiration next week. I don't see any catalyst to get a big bump out of Google here. There's nothing on the radar. I've done my due diligence, taken a look at all my intelligence gathering, and I trade Google a lot. And I just I believe this is a good trade to add to the model portfolio. So let's take a look at it. Let's take a look at we got June selected on our Trade Monster platform. You can open a free paper trading account by going to trademonster.com/TGO. Let's create a bear call spread here. So it's a vertical spread on the Trade Monster platform, and we're going to sell the 590s and buy the 595s. As our hedge, as our protection in case we wake up one day and Google did rally to the moon. So let's see what mid-market is on here, maybe 96 $0.97. Let's do 10 contracts and see what that does to our risk, how much we're risking there. We can do a little bit more than that. We never want to risk more than 5% of our Top Gun Options model portfolio. Let's try 15. That might be a little too much, but I am comfortable with that as the pilot in command of the primary model portfolio. Let's go mid-market. What was that, 97? 96-ish. Okay. Let's analyze that. And yeah, just north of our $5,000. I'm okay with that. We have a 68% probability using at-the-money volatility of, in a week, capturing this full $1,440, which is the credit we take in. Our max risk is $6,000. There's only a 25% probability of hitting that max loss. But we will eject from this trade if we lose 50% of the credit that we took in. The probability for any profit or the break even is about 70%. Let's round up there. So I'm happy with that. And the risk reward isn't super high, but this is a high probability trade. Okay. Expiration is next week. No earnings on the horizon. Like I said, it's just kind of a choppy market sideways. You know, we were up 200 and then 2 days ago, then we were up 100 yesterday. Sold the hell out of that rally yesterday because as soon as the Fed chairman started speaking and putting out his porridge, lukewarm, not too hot, not too cold, we're going to trade sideways for a while, if not down. So I like this. I'm going to throw this in our model portfolio. Again, let's see, 96-ish, 97. Selling 15 of the GOOG 590, 595 bear call spreads for 97 cents. Okay, so everybody have a great weekend. I'm having a blast trading this market. If you're not having a blast trading this market and you're just in the trade alert service, make sure you check out our live trade briefs. You can go to, if you want to give our live trade briefs a test flight, go to topgunoptions.com/live-trade-briefs. And you can take a free test flight of our, you can just do the primary live trade brief with me. You can do the intermediate and advanced live trade brief with Doug, or you can do both of ours for a 14-day trial here. Really, really cheap. Why? Because I want to get you in so you can see it. And again, I don't like to stand on the roof and shout how well we're doing, but this is pretty awesome. And since I started managing the model portfolio on March 1st to today, let's see how we're doing. I haven't run this yet today. We are up nearly $23,000 on $50,000, or actually less than $50,000 of capital there. That's pretty cool, folks. It's almost a 50% return in just over 3 months. Most hedge funds would shut down for the year, literally. If they saw 45% returns by halfway through the year, they'd close and just kind of maintain positions or go all cash or conservative, because that performance is just awesome. So, and like I told some of you, I subscribe to a lot of trading services to see what else is out there and what the competition's doing. They're sending out apology emails for their performance last month. So, feeling good. Loving life here at Top Gun Options. Hope you guys have a great weekend. And there's our GOOG trade, our second primary trade of the week. So have a great weekend, and I'll see many of you Tuesday morning, 0900 in our live trade brief. Have a great weekend, folks.